everything may only stay awesome for a little bit longer. As markets move closer to record highs, our next guest says the gains are in for the year. Let's bring in Scott Wren, Senior Global Equity Strategist at Wells Fargo. Scott, always great to speak with you. The last time we spoke was towards the end of May, and you said that you would buy the markets at that point. That was a great call. So why do you think the gains are in for the year at this point?
Well, Melissa, I think right now, what we've tried to do is take some risk out of these portfolios, largely because if you look ahead, it's really going to rely on what if we get any kind of trade deal, the market's going to take that as a positive. But I think that's a big uncertainty. We certainly don't expect a deal coming out of the G20, maybe some happy talks and a handshake or two. But, it's going to take some time to work out a trade deal. We think there eventually will be one. But right now, and I will say this, with the Fed meeting tomorrow, at 2 o'clock Eastern time, we're going to find out whether or not the market is counting on the Fed cutting rates because the dot plot's not going to jive with what's going on with the Fed funds futures, and it's going to disappoint relative to those Fed funds futures. Now, we've been talking to clients about, hey, the market wanted some reassurance from the Fed. That's certainly what Jay Powell gave us. We would argue that the market's not counting on rate cuts. We think there might be one this year. We don't think they need to do it, but we'll see. Tomorrow, 2 o'clock, and for the 2 hours into the close after that, you have some big-time potential here for a lot of volatility.
So you think one cut this year. What if the Fed delivers 2 cuts this year? Does that leave some room to the upside in your view, or no?
I think it probably would. I mean, you need to, but really importantly, for us, at least in our opinion anyway, you need some kind of trade progress to really get up above the old record high, which we're almost certainly going to test soon here, the old record high, and to really stay above that. So, there's a long road to hoe, I think, before we see some kind of trade deal. And, I guess one thing we can say for certain almost is that these global central banks in a 9-month period of time have gone from playing hardball and talking about a lot of rate increases to being pretty soft and talking about easing, and some of them almost no doubt easing at some point.
Scott, Karen, let me ask you something. So what would make you change your view and become more bullish again? You talked about possibly the Fed already being in there for some 25 basis points. Would it have to be a trade deal that was much sooner rather than later?
I tell you, Karen, that's really for us. And, you could certainly argue we're staying here at neutral largely relative to strategic allocations. But, we're leaning sector-wise. We like industrials. We like consumer discretionary. We like technology. Those will do well under a trade deal scenario. And really for us, that's what we really need is we need some kind of deal. Now, does it need to be a perfect deal? Absolutely not. Does it need to be a deal where you'll strip away these tariffs that are in place and it promises to not add more? I think that's the key to the whole deal. So, the market really, to be honest with you, would probably be happy if you went back to the status quo for the last 25 or 30 years. It'd take some uncertainty out of it, and the market would probably even like that. But I think we're probably going to get some kind of deal here. It's just not going to be a perfect deal. But like I said, in our opinion, the market doesn't need a perfect deal.
Scott, great to speak with you. Thanks for your time.
All right. Thanks, guys.
Scott Wren, Wells Fargo, BK.
Yeah, I mean, I think Scott's 100% right. The market needs certainty. There's too much uncertainty out there. So some kind of incremental step or some kind of idea that, hey, wait a second, there are not going to be any more tariffs. There's going to be a bit of a ratcheting back. I just have no confidence that that's going to happen in 2 weeks at the G20. I just don't think that's going to happen. That's why I think the market is extremely vulnerable here.
So it's incredible, though. The most uncertain we've probably been in quite some time. And here we are within 1% of the all-time high in the S&P. It's absolute madness if you think about it. But again, the market's trading on a lot of positive things coming out. I just don't see it. Again, you said it earlier. We think as Americans, when a deal is made, ready to be made by President Trump, a deal will be made. I understand why we would think that. I'll push back and say, if you're the Chinese, if you just take a step back, why would you make a deal at all at this point when you can string us out right into next year's election?